Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, March the 1st. The year's 2021. Let's talk trading. Tactical trading. One thing you should know is that these videos are for educational purposes only, and your results may differ from mine. Last week, Walmall and we talked about tactical trading. I talked about tactical entries and exits. Today, I want to talk about tactical trading from the sense that there's three things that you can manage. And we talk about them all the time. The first is you can manage your risk. In other words, you're focused on how much money you're willing to lose on a trade, or how much you're going to lose on the trade that you're in if trade is going against you. Second thing we can talk about managing is our brains, our emotions, our reactions. And then the third thing we can talk about is the actual money management when you are up as opposed to down. You see green in your P&L column on the table. You haven't taken it off, but you see green. So the question is, what tactics do you have? And I was talking with Walmart on the phone earlier, and I had mentioned something about when you're first in the trade, you're really managing the um, money, because it's like you might be up a little, down a little, and you're really focused on the money. Because the other thing about managing the trade is you can be looking at the chart. And so I came to the conclusion, or the realization, that when you're first in a trade, it's all about the money per se. But if you're up and you're up a nice amount, then it's more about managing the chart. You're going to say the chart might tell you to stay in the trade, and you stay in it. Chart might tell you to get out, and you get out. And so, but that's really difficult for a lot of traders to do when they first enter the trade, especially if it goes against them and it starts to get near their stop loss. But they might get near their stop loss, but the signal is still telling them stay in the trade, stay in the trade. But you want to manage the money, and a lot of times you just may pop out. But the question is, are you managing the money, or are you just really managing your emotions? And that's what you have to distinguish. You have to say, okay, I'm looking at this from a logical standpoint. This is what my risk management parameters are. They haven't been met, so I'm not going to exit the trade. The chart's telling me that I still have a valid signal. I have no reason to exit the trade based on the chart, so I'm going to stay in. And it's difficult to do. So unless you have that written out, unless you have that planned out, unless you practice it on a regular recurring basis and make it a habit, and that becomes how you trade, as opposed to something else where you're constantly going through an emotional reaction, and then you're managing your emotions. Because I know I do that sometimes. I'll get in the trade, it'll go against me, and I'm waiting it out, and then as soon as I get just a couple pips ahead, or I see green, I punch out, because that's one of my rules sometimes, especially if there's a one ball blocking my path. But then sometimes, I remember all the ones that, I take one pip and I could have had 20 or 70 or something. Um, but sometimes that's revisionist history or selective memory. But I'm sure some of you may have experienced something similar. Okay, so on the gaps, we still have some open gaps here for the week so far. And you can see the pound on the week and the day is down right now. We're still putting in that day range here. We're only 9 pips off the bottom. Got a pretty nice range on the day so far, though. Once again, we're 271 pips above the yearly open. And right now, if things don't change, we might just have an inside bar today. Haven't had one in 18 days, so There you go. The range 95, but you see we've got a bunch of pairs over 100. So the pound is actually lagging here out of the pound pairs. And you can see we did take out the pivot. We took that out last night, the second hour. It looks like the red rats got the feast and the green rats feasted a couple times. And we're in the green rat zone once again. Weekly pivot 1.4179. We have not reached that weekly pivot, but what we did reach was the monthly pivot here at 1.39099. We've hit the monthly pivot. First day of the month. And the daily, we missed the Friday pivot. We hit today's. So a couple missed pivots there on the weekly. Once again, 1.40179 to the upside. 2 weeks ago, we missed the pivot to the downside. And on the month, once again, we took out the monthly pivot. Not too many missed month pivots. We are in the lower wick zone. You can see we've been in and out of it a couple of times. On the trading chart here on the 1 minute, you see we got a 3 ball at the bottom, looking for price possibly to reverse to the upside. On the Walmart chart, you can see here there was a break of the previous hour's low at 169. So since that was ahead of the 10 line, that's the break we're taking here. And as you can see, once again, trading Walmart lines for the past few hours were profitable. Simple trades. Basically, you know what to do when price hits the line. It's color coded. And that reminds me, a couple of traders, they received the batch 3 of the donational indicators that I sent out for this year, and they want alerts. Well, as you guys probably know, or maybe you don't know because some of you haven't been with me that long, I usually don't like to put alerts on indicators. To me, you should be paying attention. You should be there. Some people want to have a text message or email message. But if you really need alerts, you can go into the dashboard and have the alerts on there and have set up the order blocks, and that will alert you when there's an order block. But really, for order blocks, I don't think you really need to be alerted. What you need to do is you know that you can see, okay, there's an order block there. And then when it returns to that level, that's when you probably want to take the trade. So let's see, do I have order blocks here? Yeah, so right here, you can see you had order blocks here, and then prices returned. And so now looks like there's some opportunities here. And that's on M1. And you can see we've got the M5 here is in yellow. The order blocks, I'm not even sure how many order blocks I have on this particular. Oh, I've got a bunch. Okay, so we've got M1 and M5 showing order blocks. So here, if you go over to M5, you can see how that order block was formed. But it doesn't look like we have any on M15. To the downside, we have an imbalance here. Back to M5 and to M1 to pinpoint those entries. So taking an order block trade while it's within the rat zone sometimes can be profitable. I'm trying to remember if there was any other questions. I don't recall any other questions on the indicators. Trying to think, were there any other questions on anything else? Not that I can recall. But, on the tactical trading, it really is, having a plan in place, sticking to the plan, executing the plan. See right now, you can see prices nearing that double O. I don't know if it's going to hit it or not. We've got 5 red H4s in a row, two red H1s and 2 M30 candles in a row. So let's see if we go back here, we can switch time frames. Look at the H4, 1, 2, 3, 4. This is working on the 5th one. 1, 2, 3, 4, 5, 6. So you might want to start looking for that buzzard reversal after 3 or more of the same candle colors in a row. And at the moment, price isn't near any of the levels. And the other reason I don't put alerts on, it can get pretty noisy sometimes. So that's just me. In fact, I have my sound disabled in my MT4. So like every now and then you might see that H1 pop up on my screen. I don't hear a sound. It just pops up. Like I said, it can get pretty noisy, especially if you're looking at multiple pairs on multiple time frames. It'll just drive you nuts. And besides, you only need most traders out there who are juggling pairs, if you're profitable, then by all means continue. But if you're trading more than one pair and you're not profitable, you need to pick one pair, stick with it till you get profitable. And the thing about it is, once you get profitable and you stay profitable, you might not want to start trying to juggle 2 pairs. Why? Because you're profitable. See, a lot of times what happens is that people add to things when they really need to subtract. Going back to keeping things simple. If you're not having success, you think, oh, if I add this one more indicator or this one more method, no, no, no. Or if I trade multiple pairs, no, no, no. No, you need to bring it back, cut things to the basics, to the minimum, keep it simple, then you can focus. So for example, here on these wall mall trades, this is pretty much cut to the simple. You've got horizontal lines that don't move, with the exception, every candle will put in a different high or low, and then you trade the candle color at the line. So if the candle color matches the line color, it's pretty simple. And then all you have to do is 1, take the trade when it appears, and then 2, manage the risk, and then manage the money. You can do what the chart tells you to do. And there's no reason for FOMO or ROMO or any of those things that you do that just work against your psychology. So you don't need to do that. And especially the new traders, it's so easy to get caught up with the indicator du jour, the latest and greatest. No, 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 no. Just stick with horizontal lines, especially if you're new. You don't need that stuff. You need to learn the basics of trading, that money management, that risk management. Because once you get those 2 things down, you carry those to whichever system or method that you're using, because the method doesn't dictate your risk. You dictate your risk. So, fellow traders, I hope that helps you out a little bit more with tactical trading. And just always keep in mind and never forget, it's not what you trade, it's how you trade it. So you go out there and drain the banks. This is TheRumpledOne, over and out.